Good day and welcome to the Xeplomoc Design and Tech Limited Q2 and H1 FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravi Udeshi from EY. Thank you, and over to you, sir.
Thank you, Aman. Good evening to all of you, and welcome you to the Q2 and H1 FY24 earnings conference call of Xeplomoc Design and Tech Limited. We have sent you the press release and the investor presentation, and the same has also been uploaded on the Xeplomoc website as well as on the stock exchange. In case anyone does not have a copy of the same, please do write to us. To discuss the results and the outlook for the future going forward, we have with us today the top management of Xeplomoc, represented by Mr. Sandeepan Chattopadhyay, Managing Director and CEO, Mr. Srinivas Kura, Whole-Time Director and CFO, and Mr. Jason Jose, Whole-Time Director. Before we start the call, I would just like to remind you that the safe harbor clause applies. With that said, I now hand over the call to Mr. Srinivas Kura. Over to you, sir.
Good evening, everyone, and welcome to Xeplomoc earnings call for Q2 and H1 FY24. I hope you and your family are doing well. We continue to see challenges in the startup arena due to the slowdown in funding with the emerging technology sector. Hence, as stated in our previous call, we have proactively pivoted our focus towards diversifying into corporate segment. I will dwell into the details of this strategy shift in the later part of my speech. Our operating revenue for the quarter was recorded INR 21 million for Q2 FY24 as compared to INR 43 million in Q2 FY23 and INR 23.1 million in Q1 FY24. The revenue decrease is on account of the transition from the startup segment to the corporate segment, and also on account of discontinuation of government business. The government business was discontinued due to payment delays, non-profitable, and also changes within the government department that we have been dealing with. We are seeing interest from corporates for our services. However, the conversion is expected to take some time. We expect our revenue to gradually start getting traction over the next few quarters. Operating EBITDA adjusted for the quarter was a negative INR 36.6 million as compared to negative INR 16.9 million in Q2 FY23 and negative INR 27.9 million in Q1 FY24. I would like to give some context to the increase in EBITDA loss in Q2 FY24 as compared to Q2 FY23. Though operating expenses have reduced, however, the decrease in revenue has led to the said losses. We expect our operating costs to be stable from here on. Net loss for the quarter was INR 45.3 million, partially due to INR 8.3 million of ESOP expenditure and increased depreciation and amortization. The depreciation and amortization increase was due to increase in fixed assets and write-off of assets. This in comparison to a net loss of about INR 40.4 million in Q2 FY23 and net loss of INR 38.2 million in Q1 FY24. Regarding the change in revenue, we would like to state that our revenue strictly was diversified within startups, corporates, governments forming 32%, 61%, and 7% respectively of our H1 FY24 revenues. We expect focus on corporate segment going forward. More focus on data science will enable us to sustain the increase in the revenue. Our team size is about 107, including employees, interns, consultants, as compared to 117 in Q1 FY24. Till date, we have served 61 clients, and our sustained interaction with the clients is the foundation for performance. The fair value of our investment in portfolio companies stood approximately INR 533.9 million as on 30th September 2023. 30th September 2023 as compared to INR 684.6 million on 30th September 2022 and INR 404.2 million as on March 31st, 2023. I would like to give some context to the decrease in the value of portfolio investment as stated in the start of the speech. There has been an overall slowdown in fundraising activity in the new economic segment. Some of our portfolio companies were in fundraising stage for their growth plans. The slowdown affected them, leading them to curtail their plans. Hence, now they are operating at a significant reduced scale or exploring other options, including strategic M&A. I'll discuss some of this in detail now. For Fortigo has closed its operations and is in the process of winding up. Once the said process is done, we expect to receive a consideration beyond our cost of acquisition. However, as a matter of prudence, we have written off the investment. Mihoop is a convergent AI platform providing real assistance and analytics on customer agent interaction to accelerate revenue CX and business performance. Mihoop's annual recurring revenue is close to $1 million. Mihoop's AVA is a smart, customized virtual assistant benefited by AI with a multilingual support. Mihoop AVA was deployed in close to 52,000 cars in Q2 FY2023-24. It has an annual recurring revenue of close to $1 million. Woovly is an e-commerce platform driven by social commerce. Woovly's platform currently has 54,000 plus influencers with total of 175 million potential shoppers. The video views on the platform stands at 192 million per month. It is projected to reach $48 million annualized GMV run rate by March 2025. Woovly is looking to roll out a SaaS offering for brands to plug and play video commerce.
Srinivas, sir, sorry to interrupt you.
Snaphunt. Snaphunt is a remote talent marketplace that matches the total employers have grown 10.5% in Q2 FY24 compared to Q1 FY24. Snaphunt's soft launch of Snapfire fully managed global contracting solution with 2 partnerships in place at the end of Q2 FY24 to boost recurring revenue from a fully managed solutions. Incube is a technology, IoT and analytical platform solution for rural India. It is now compatible for livestock sector as well as expecting clients by FY24 and in poultry and dairy sector. It's in-house development going on for low-cost IoT sensor for farm-level ambience and soil moisturized tracking. POC is in advanced stage. Expect a commercial rollout by FY24 end. Pencil. The Pencil app provides a platform for book writing and reading. It also provides a mobile application for reading books. Till date, there have been more than 40,000 sign-ups on the platform with a total number of 1,000 plus authors and 1,800 plus published titles respectively. It has recorded steady publishing volume at around 4 to 6 books a day. The team is currently working on making Pencil paid for authors. Pencil is widening its B2B services, offering for OTT platform in order to improve cash cycles and revenue. The Star in You. It is a learning as a service platform to drive organizational excellence. It plans to launch a homegrown DIV program planner product for enterprises by FY24 and to accelerate sales. Cohort-based leadership learning solution will be TSM's key focus area going forward. It plans to slowly build suite of products to help accelerate sales and effectiveness of learning experience. It is shifting focus from a broad-based women-only target group to focusing on both genders. School of Accelerated Learning, SOUL. SOAR provides industry in-demand courses to freshers, undergraduate students, and employed candidates for upskilling. SOAR has successfully raised a bridge round of rupees 7 million from existing investors. The National Skill Development Corporation and SOAR have partnered to skill India's youth for the growing demand of software development engineers, data science, and machine learning specialists through an outcome-driven skilling model. Through this partnership, SOAR aims to skill more than 5,000 students in the next 3 years. It's been onboarding 15 plus fixed fee learners every month. Signal Analytics. Signal Analytics is about 91% holding subsidiary of Xeplomoc Design and Tech. It is building an ecosystem of learning tech companies and products that focus on building the fundamental capabilities of self-learning. Signal waitlist has more than 11,000 users currently. It will run a 2-month launch campaign in H2 FY2024 to reach its goal of 20,000 users. Signal has already started a pilot at school in Hyderabad. Catalyst. Catalyst is a disruptive competitive intelligence system and data analytical platform to provide access to financial, clinical, scientific, and regulatory information exclusively in the life science industry. Catalyst formed a strategic partnership with LaunchIt Ventures, a Canada-based venture studio, to accelerate sales, marketing, and product development to better serve pharmacy and biotech and investors. Catalyst recently integrated visualization to its core platform, and company plans to roll out an interactive model, alerts, and clinical trial analytics. Catalyst has strategically delayed large-scale commercial launch due to bad biotech and pharma market conditions and focused the last quarter building out the visualization functionality. Xelp enters into startup mostly at an incorporation stage or a pre-seed funding stage or at a pre-revenue stage. Majority of our startups have just started revenue generation and are still burning cash. Few of our startups like Mihuk and Boogli are doing well. The rest of them are yet to close their next round of fund. Hence, they are focused on revenue increase and sustained improvement. As of now, the startup ecosystem is still seeing significant pain, and we are looking at scaling up Xelp's own products and services. We will be focusing on more revenue generation on corporates, focusing on data science, artificial intelligence, and machine learning. We will be looking at only onboarding startups on a selective basis if they look very attractive. We are working towards becoming EBITDA profitable at the earliest. However, considering the current environment and our current state of transition of focus shift from startups to corporate will likely take some time. It will take some quarters for the set profitability to materialize. With this, now I request to open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from... Yes, sir, we can hear you. If you wish to remove yourself from the question queue, you may press star and 2.
Hello?
Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Punit Motihar as an individual investor. Please go ahead.
Hello. Hi, am I audible?
Yes, we can hear you.
You're audible.
Hi. Firstly, Dhanteras to everyone.
Thanks, wish you the same, Punit.
Thank you. My first question is regarding Boogli. As per the presentation, Boogli is valued at, we have 8.7% of stake, which is valued at 15 crores. So, and just in last quarter, you had mentioned that Boogli had raised 10 crores at a valuation of 4 million, which is approximately 32 to 34 crores. So, what am I missing?
So, basically, Puneet, what has happened was they have raised one round at a 4 million, and there was one subsequent round which has happened close to a valuation of about 20 million.
20 million, which is after the round.
Post money of about 21 million. Post money investment of about 21 million.
Okay.
After
Got it.
the 4 million round, there was subsequent round which was happened at post money of 21 million.
And how much money was raised by Woogly?
So they have raised about close to 11 crores in the last round of funding, where the valuation was close to about approximately 20 million pre-money.
Okay. Got it. And sir, as per March 2023, we had close to 19 crores in cash and cash equivalents. How much would that be now?
So that would be close to cash and cash equivalent would be close to about 1 second. I'm just giving about 10 crores.
Okay, so we are using the cash to cover up for our losses. Is that a correct understanding?
That's right.
Okay, so at this rate, what is the burn rate?
So currently, in case if you look at it, Puneet, we are burning close to about 1.45 to 1.5 crores a month. It's not a burn, and this is the total cost. If you look at the burn would be roughly close to about. I'm just taking into consideration only the cash component. I'm not considering the non-cash component. So the burn would be close to about 95 lakhs to go to 1 CR.
Okay, so we have a runway of 10 months left.
Yes.
Okay, so are we planning to raise money again, or how does it go to keep Xeplomoc sustainable in the long run?
Yeah, Puneet, in case if you look at it, what we did was we shifted our focus from startups and from government to corporates only 2 quarters back, and we have also seen that there was a slowdown, especially on the IT side. So because of which it is taking more than expected time to close the transactions. So what we see is going forward, the burn should come down substantially. If not this quarter, that you will start seeing it from the subsequent quarter, which is from Q4 of FY20.
Okay. Got it. Thank you so much.
Thanks, Puneet.
Thank you. A reminder to our participants, please press star and 1 to ask a question. The next question is from the line of Om Prakash from Amite Investment. Please go ahead.
Hello, sir. I am audible?
Yes, please go ahead.
Sir, thanks for the opportunity. Sir, we have invested in First Sense Technologies Private Limited, but this is not in the presentation, sir. And this was said to be the move of video technology. First question. And second is, give guidance about, sir, product and services business. Is there expanding? They are expanding, sir?
So the first question I'll take it. The second question Sandeepan will respond. As far as the First Sense is concerned, First Sense, it's on a video analytics platform. The technology is very good. Even now, we like that technology. There would be a good demand for that technology. But unfortunately, since the funding was not happening, and entrepreneurs were not in a position to survive, and they were not able to raise funds. That is the reason why they have to shut down. In case if you look at our current financials, we have written off the First Sense. But what we are also looking at, we are also evaluating in case if we can take that particular product, whatever they have built into Xeplomoc for consulting, we just but thing has been materialized. As far as the products and services concerned, Sandeepan, over to Sandeepan.
Thanks, sir.
Hi. So For the products and services, yes, we are seeing some increasing traction, and now, like Srini said, we are solely focusing on the corporate sector. It's not something that we had envisioned doing when we started Xeplomoc, but at this point of time, that seems to be the prudent way. And unless a very mature startup is coming on, where the services revenue is not subsidized like our previous parts were, it would go attraction. So we think that the adjustment will take about another 1 or 2 quarters, and we will start seeing the burn come down and hopefully slowly overturn to get some profitability into the company very soon.
Thank you, sir. Thank you, sir.
Thank you. The next question is from the line of Prithvi as an individual investor. Please go ahead.
I hope I am audible.
Yes.
Yes, Mr. Prithvi, you're audible.
Yes, you're audible.
Yes, okay. Did Xeplomoc participated in Soul Bridge round? They raised around 70 lakhs, it seems.
Yes.
Okay.
Xeplomoc has participated.
Sorry?
Yeah, Xeplomoc has participated. It's not on a pro rata basis, but we participated just for sake of participating. It was only 5 lakhs contribution from our side.
Got it. But Xelp has opportunity to invest up to 10 lakhs, right?
Yeah, but basically we don't want to do a cash investment because we want to preserve cash for our own operations. That's one of the reasons why we haven't invested in form of cash.
Understood. My second question is regarding a product called Extract. Upcoming these 2 years is going to be elections here in India. Do you see any revenues coming from that product, Extract?
It's a good question. We have been trying. As of now, there is nothing which has matured, but some POCs and some things have occurred. We are still awaiting to see if that will be there. See, many of these decisions had taken pretty last moment in some of the parts. Obviously, they had their own whole strategy and all working. So we are an add-on product, so they are evaluating it, and at certain juncture, we think some of these things will have post some of the state elections that are taking place.
Thank you, Samit.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. The next question is from the line of Kanu as an individual investor. Please go ahead.
Sir, my question is that Xeplomoc UK had 0 revenues some time back. So what is the current revenues run rate now?
So as far as the UK is concerned, as we have been narrating even into the last two earnings call, we are not going ahead much, or we are not investing time and effort in UK right now. The reason being, since we are seeing a slowdown in UK, but in case if any opportunities are coming, we are directly entering into a contract with the Indian entity itself. So as of now, as of 31st August, we do have one UK client, but we are serving directly from India.
Okay. And do any of the products right now have any revenue coming in of the 3 major products that are listed on the website?
So no. Sorry. Go on, Sri.
Yeah, no. Right now, no, we are not generating any revenue, but we should see some traction on OCR maybe from coming quarter onwards.
Okay, so that Extract product, should we expect revenues in the coming next year, in the first 6 months of next year?
So Extract is, I'm not very sure, but the OCR part and Expand, these are the things where we expect some revenues to come from beginning of next year, next calendar year and financial year.
Okay, then thank you.
Extract is slightly, we don't know exactly which way it will go. The market reaction is good, everyone likes the product, but at the end of the day, it's not exactly a stable corporatized market that we're dealing with.
Okay, sir. Thank you. That's all from my side.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. The next question is from the line of Nikhil from Capital. Please go ahead.
Hello, sir. Good evening. Thank you for the opportunity. I have a couple of questions. When I hear that the company will change its focus to corporates from the extent focus on startups and government, I would like to know which segments of the corporate you would like to focus on. I mean to say which technologies or which verticals. And second sub-question I can say is how would you differentiate yourself from other IT services companies? Because I'm asking from an investor point of view. When I look at this company, I started looking at this differentiated business strategy. Now, if we are again going to a services company to corporates, how would it be different? Okay, thank you, sir.
That's actually a very, very right question to ask, and that's one question that we have answered to ourselves also to decide on this part. But it's a prudent way to do it so that we can sustain ourselves in that part. Now, that being said, let me tackle the second question first and tell. As a philosophy, we are not changing. You may say that we are taking a pause at this point of time to do that part. And the vision and the overall focus of the company stays same, which also will tell you how that's a differentiation that we'll bring to the services we bring to the corporates also. So we have always been focused on innovation, and startups were always the biggest harbinger of innovation, and they were the first line of innovation, so focus on startups were there. That said, corporates also have a lot of innovation needs for their own internal products and for other parts of things of that sort. Some of the corporatized startups are also what we treat as corporates, but they are in common parlance still severe startups. So we are building a pricing engine for a so-called startup, but it's actually a corporate engagement for us, because for us, a corporate engagement is when we don't get any equity out of it. We just get the services piece. Now, the differentiation is focused on that part. We are not supplying manpower or skill sets to corporates like normal software services companies. We are doing turnkey solutions for a problem or a project or a product that they are building end to end. As of now, that much of differentiation we have kept and that much of focus we have kept onto our part. We are also opening up to the chance of getting a lot of startups from overseas to do their product development with us, but we are not looking at equity in those startups necessarily. So the fact that because we were looking at equity and all, sometimes that used to be an entry barrier, but we want to still stay focused on the skill set we have built on innovation. But at this point of time, it's probably better to go for cash out than try to take a risk with the equity part. That's the overall change of strategy. Does that answer your question?
Yes, somewhat.
Yeah, it's not the best way that personally I would prefer, and that we have to admit. But at the same time, taking those risks and looking at this sort of a paucity in the overall market, we didn't think prudent for us to sort of go ahead and, try to be very dogmatic about it and not be effective. So getting that. But at the same time, the portfolio still exists. Those companies are still served. And that part of whatever has been the past part of it is there. And we are looking at startups, but in a slightly more stable situation. We have shifted our engagement time from before the product is even thought of, we were entering at that time. Now we are looking at startups only where they can sustain and sort of at least pay for the services we are providing. But the engagement with startups is there. Government, I guess, with all these things going on, we probably didn't have the capacity to handle the kind of typical situations that comes when you handle government projects. So we decided that it's not something that we are able to give have the staying power to stay and invest for. It needs around 2-3 years more investment. So for the moment, not doing it directly, but at the same time, we would try to do it with partners who can handle those situations, and we can do the technology development as usual.
Okay, thank you.
Thank you. A reminder to our participants, please press star and 1 to ask a question. next question is from the line of Puneet Motihar as an individual investor. Please go ahead.
Hi again. My question is regarding Catalyst. We have 0.3% equity in that company. Can you just explain to me how does the Class A share equity work?
So basically, if you are with voting rights, you are without voting rights. So that's the only difference what we have. So in case if you look at it, including voting rights and without voting rights, we hold close to about 40% equity in the Catalyst. And post that, they must have given some ESOPs on a dilution basis. Even if we remove ESOP, etc., it would be still close to about 36-37% on a fully convertible basis.
36 to 37%.
That's right.
Okay, got it. And this question is directed towards Mr. Sandeepan. Sir, so you mentioned in the annual report that the services will be put on steroids. So shall we start seeing some traction from next quarter onwards, like some significant jump in revenue from next quarter onwards?
So, Puneet, first of all, transition is happening. We're getting out of government projects and sort of keeping the same amount of revenue coming into the corporate part of it. I think we should see growth in the corporate segment from probably Q1 next financial year. We'll stabilize by the next 2 quarters to make sure that the loss of revenue that we are going to incur for letting go of the government projects is made up for from the corporate sector. That eases our cash flow situation. The pending payments and all from the government was becoming a hassle for us.
Okay, so you're saying we'll still have muted revenues for the next 2 quarters, and starting from next financial year, Q1 of FY25, we'll start seeing corporate revenue.
Correct. But you'll see some restructuring things and all happening from Q4 itself. There are certain other plans that we're looking at because there are things we have been building on that for the products and other stuff. That we will see getting some cost benefit will start coming because we will start deploying those people into the services parts of it also.
Got it. And so we've also ventured into this new venture called Age Tech, with just 10 months of runway remaining in the company. So don't you think we're spreading ourselves too thin, especially at this juncture where,
Absolutely. That's the reason I said the restructuring we'll see. Things we have been building in the stealth will essentially be kind of made independent, and we will not be incurring any costs for any of these things for the time going. We will be preserving our cash and not taking these adventurous ideas now. But at the same time, that's at a mature stage where it has other means of functioning that we will be working on.
Okay, got it. Thank you.
And apart from that, Puneet, as far as Age Tech is concerned, Age Tech will raise funds on its own for operational and product development.
Okay, got it.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. The next question is from the line of Wayne Fernandez as an individual investor. Please go ahead.
Yeah, good afternoon, everyone. Am I audible?
Yes, Wayne, please go ahead.
Yeah, actually, one of my questions got answered in the previous round. I just have one additional question. I just wanted to understand what is the promoter's vision for the company. Are you all still confident? Because I think a lot of things have not gone as planned. And generally, there's been a sharp fall in the share price, and there's been no promoter buying as such. So as far as the investors are concerned, I just wanted to know, are the promoters still having the same confidence in the company?
Absolutely. We are in it, and see, I can see there's no point saying that these were all told before because, of course, the momentum and all those things are happening. But a part of it was anticipated that it will not be that all projects will go on to succeed. At the same time, some of the ones close to our heart failing did have some momentary setbacks to each of us on an emotional basis, but I think overall it's a game of maths. Of the first lot, of the 3-4 that we really bet on, one has really gone there, but one has really gone up better than what we expected. I think overall, I had always said that once we went public that it is a 7-year cycle. We will go through things and all. It's a little unfortunate that within the first 2 years of there, we failed to anticipate headwinds which were there. We went with full gusto because we thought it's the time to build onto that part. But now that we are prudent and all is there. The long-term part doesn't get affected. It's just a question of making sure that we set our priorities and the regulator in the right focus to make sure we survive onto this part and do it. And it's at the same time not losing the basic DNA we have so painstakingly built in terms of culture and innovativeness. We don't want to become a body shop just to make it a thing. So there is a balancing act we are doing. Instead of going all out and trying to harp on and just getting to profit booking in terms of margin making and all, which obviously was one of the alternatives, we have stuck to the basic fact that, okay, we will go away from the startups because that's what's prudent. But at the same time, we don't want to become a kind of a skill supplier just because we have the skills. We still want to retain the product solution development attitude, and this is the way we will do a specialized services part. So we are here. We are not going anywhere, that much I can tell you. Personally, obviously, this is something that is going to be part of me till I am working. That much I can tell you.
All right, yes. Thank you, Mr. Sandeepan. Just one follow-up. I agree with you. I think it's going to be a long cycle, and that's something I guess sometimes the market probably not understand it. But as for me personally concerned, yes, I have full confidence in the company, and I had slight concern when I heard that we have just 10 crores of cash remaining. But as long as I think the company manages to survive, I think over the long term this should probably do good. So that's my only. But I think you answered that in the previous question, so I won't harp on it. Thank you.
Thank you so much.
Yeah, thank you.
Thank you. The next question is from the line of Prudvi. As an individual investor, please go ahead.
Hi again. We would like to know at this point of time how much of people's resources are invested in kind of services and let's say startups.
So, as far as the total resource are concerned, close to about 8 to 10 people are working on startups, but those are not into technology, more like interacting with them, giving some sort of an advisory or helping them in terms of go-to-market strategy or helping them in terms of fundraising or helping them in terms of like how to set the process, and the few set of people, close to about 25 to 20%, maybe about 10 to 12 people are working on some of the other R&D, and the rest of the people are working on the services project.
Services and products, internal services also, both of them.
Yeah.
Yes. Thank you. Wish you happy Dhanteras and hope you guys create wealth, all of us.
Thank you.
Yes.
Thank you.
Thank you so much.
We do the same.
Thank you. A reminder to our participants, please enter star and 1 to ask a question. The next question is a follow-up question from the line of Om Prakash from Amita Investment. Please go ahead.
Hello?
Yes, sir. Tell me.
When will the effect of the ESOPs will end? Every quarter it is about 3 to 4 crores. And in these 2 quarters remaining or more than that, sir?
So another 3 quarters would be there, sir. 1 quarter has gone. So you will see in another 2 to 3 quarters.
2 quarters more?
Yes.
Thank you, sir. Thank you.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. Ladies and gentlemen, if you wish to ask a question, please press star and 1 at this time. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference back to the management for their closing remarks. Thank you, and over to you.
Thank you everyone for joining us. You can reach out to us in case if you have any further questions. Wishing you all a happy Dhanteras, Shubh and safe Diwali. Thank you.
Thank you, everyone, and thanks for being with us through all this.
Thank you. Thank you very much. Ladies and gentlemen, on behalf of Xeplomoc Design and Tech Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.